What's good, guys? Outhenticfx here. Today's lesson will be on swing trading, guys. How to swing trade using basically smart money, right? So for this example, we will be using the 4-hour and the daily. We will not go on to the 1 hour at all. So obviously now this is much more um, tiring and it takes a lot of patience, right? Because here you just need to be very, very patient and wait because these are 4-hour candles, right? We don't go on to lower time frame. We're basically using the bigger picture, just a macro time frame, right? So for this example, you're going to be using GBP, JPY. All we're going to do right now is identify the direction, which is clearly bullish. We are printing those higher highs, higher lows, higher highs, higher lows, higher highs, right? So we can clearly see that we do have price breaking structure over here, right? Break of structure, right? And then what do we have? We have our order block here, left behind, right? You can clearly see beautiful markup, right? Order block left behind, price obviously, price obviously break structure, right? We leave minor liquidity here, right? On a lower time frame, obviously it will be a lot more clear. Price travels, here's liquidity, so liquidity swept, right? Within this, you can see microstructure is clearly printing, microstructure. So high, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Oh, not bad. Equal high, right? Break structure, right? Break structure on a lower time frame. But we're not worried about that. We swing trading, right? So we're just looking at the bigger piece. So we waiting for price to come back in here. We break structure to the bottom, BOS bottom, right? I can delete that, right? BOS bottom, right? Price then comes sweeps liquidity, break structure again, right? Break of structure bottom, flows all the way, creating these lower lows, right? On the minor, on the micro side of things, right? So we have this low, again, we have this low, we have this high, we have this low low, we have this low high, then we have this low low, right? Then what happens next? We break structure here. This is a sub break, right? Obviously, this would have been our entry. We would be targeting the next high for about 400 pips. You can clearly see this is swing trading, guys. It's all about patience. With sub break of structure here, sub break of structure top. Then from there, we break structure again, right? To the left, break of structure top. So what are we looking for now within this expansion? We're looking for our order block. So we take our fill from the low to the high. We look for a candle within this area. And to be honest with you, the only proper candle that I see is definitely this candle over here. Right? We drag that left. Drag that left. Drag that left. We break structure. Right? We print. Right? From there, obviously we have price leaving imbalance on this candle, right? Imbalance. So we do know that price needs to fill that imbalance eventually, right? We need to fill that imbalance. So we already managed to bag 400 pips on this move, right? 400 pips on that move. And now we are waiting for price to basically come into this order block, right? So price pushes all the way down, right? You can see that we have a clean manipulation phase over here. Manipulation phase over here. right? We can make that purple, lock that in, send it back. Within this manipulation phase, we can clearly see that we leave liquidity, right? So this is where retail traders are entering the market. Liquidity here, right? We know our area of interest. We are not going to jump in to get in, right? So what happens is now, right, looking at it more, within the manipulation, it sweeps liquidity, right? Liquidity gets swept, right? So liquidity is swept. We still haven't reached our point of interest. But look what price does. Price then now pushes up sub-break of structure, right? Sub-break of structure here, right? Sub-break of structure to the top, as well as here, breaking structure again, right? Sub-break. Obviously, our true break of structure will be this high because this is the high that what you call it. This is the high that we actually want to see broken because right now we stuck between a trading range between this higher high and this higher low. So price either needs to break down here for the price to be bearish or break the high to continue. So sub break of structure. So the main break of structure is to this level here, right? Price pushes up break structure. Why? Because within microstructure, bearish momentum kicked in, right? And it broke structure here on the lower time frame. So sub break of bottom, sub break of structure, you can see lower time frame structure, you can see that price printed that high, higher low, high, higher low, high, higher low, and then high, right? You break structure on the microstructure. So why is price coming there? Price is coming there. Why? Because it has to mitigate this order block, as well as probably filling imbalance here. Perfectly mitigates this order block, and then that could have been a short-term sell, right? Into our area of interest, right? Into our area of interest, right? Into our area of interest for about a 40 pip stop loss and 250 pip gain, knowing very well that our main interest is definitely here. Let me lock that in so it does not move. And then when price hits that area of interest that we initially targeted, we then know that we need to get in and buy from that area, right? We still didn't break the previous high low, so that means we're stuck in a trading range. So from here we buy from here because this is our demand zone, right? And we target the highs for about another 400 pips, right? We target the highs for another 400 pips, right? Or you can just target this high over here, right? But the reason why I know price is going up is because it left liquidity, guys, right? It left liquidity over here, liquidity left behind. So that means price is definitely going to continue its push to the upside, right? Definitely going to continue to push to the upside, either breaking structure or just filling imbalance and then continuing down. All about that momentous push. So now what happens? This now becomes our newfound higher low, and this now becomes our newfound higher high, right? Within this, we have a sub-breaker structure here, which causes the sweep of liquidity. So sub-breaker structure top. And then what do we have? Another phase of manipulation. Another phase of manipulation. So we can put that purple, right? Another phase of manipulation. Oopsie. That is purple, right? So now we know, guys, that price eventually needs to come down, right? So we have our first expansion, a retracement, followed by manipulation, and then our second expansion, which is a sub break here, right? all I'm doing now is marking up my demand zones, right? My points of interest for future reference. So I'm definitely looking at this order block over here for future, right? Make that blue, right? And I'm definitely also looking at this order block over here for future, right? Knowing very well that liquidity has been, trend line liquidity has been left behind as well within this manipulation. And then obviously I'll drag that right, that right. So liquidity has been left. So we managed to finally break structure, which is a true break of structure. So now we say stop, price pushing. Why won't I um, be interested within this expansion? Because we left liquidity, guys. We left liquidity below. So it's better for us to focus on this expansion. We take it, you can clearly see we take the low to this high. And you can see that all these candles fall in between the 70 and our 100 phase, right? We can mark up this candle, but it's really not worth it because we know where price is going, guys. We really know where price is going. Okay, cool, marked up. Everything is now beautiful and perfect. We leave imbalance here. We leave imbalance here, right? Imbalance, a lot of imbalance. So let me close that. Close that. Imbalance is left behind as well here, right? And then now what happens, right? We enter this massive phase of manipulation, right? From this massive phase of manipulation, right? If we're gonna put purple, right? We have a ton of liquidity, right? A ton of liquidity, ton of liquidity. So now we know two things. Price needs to sweep liquidity here, clear this imbalance, and sweep liquidity here. So for sure, this can have a reaction on a lower time frame, but the big push is going to come from either one or two, right? One or two areas, right? So from there, we have liquidity and another expansion, which then leaves imbalance as well. Leaves imbalance as action, breaking structure to the top. So now what happens? Top. This now becomes our true higher high, and this is now our new true higher low, right? From here now we enter a phase of fugazi. The market is tripping, reached its highest peak climax, follows multiple manipulation. We will call this a distribution phase right now, right? Because the market usually moves in phases, guys. So let's look at it like this, right? Phase one, right? Retracement. Phase two, retracement, right? We're looking at the bigger picture. Phase three, right? Retracement, right? So usually we'll come to a point where we'll start entering the distribution phase, right? This is where Wyckoff comes in. We will learn about this in the next few videos to come. Wyckoff comes in, and then this is now how we will know when to change directions or shift bias. So as you can see, price does come down, right? Price does get activated into this order block here. Let me see that properly, but price does come into this order block here, right? Mitigates this order block, right? Sweeps liquidity, so liquidity there is swept. Liquidity swept. Imbalance is clean. And what does it do, guys? It breaks structure to the left, right? To the bottom. And then within this, we can see minor breaks of structure as well. This will probably be more clear on like lower time frames, right? You probably see on lower time frames. Break of structure, sub break, bottom, right? And then we leave a bunch of liquidity within this area here, right? We leave a bunch of liquidity there. Price then comes up into our distribution phase, right? Cool. So which candle here caused that break of structure? Obviously, we have this candle. Let me just fix this. That candle there. So we have that candle there, right? And as well, you can see there's a minor break of structure over here. So there's definitely a secondary institutional candle if we zoom in. Right? We can clearly see that this is the last up candle before the major move down. So we are gonna circle this candle over here. So what happens? Price comes in, right? We buy from here, obviously, because we can see the shift, right? So usually when it comes to swing trading, right? If you want a solid, perfect entry, you'll go down to a lower time frame, wait for that confirmation. If you someone who just wants to, let's fix this order block, guys. I couldn't see it nicely. If you someone who wants to just place your order, right? Obviously, depending on your spreads, as we watch the spread, you will place your order and have your stop loss just maybe a couple of pips below, right? And then from there, you want to place your order and leave it and just let your profit run to your next supply zone. You can't do that. It is allowed. So as you can see, price pushes up 300 pips back, right? Swift liquidity cleared imbalance. From here now, we're looking for sells, right? At this point. We're looking for sells at this point. Looking for sells at this point. Because why? We are bearish, right? So what does the market do? The market now leaves more liquidity at the highs, more liquidity at the highs, which is perfectly fine with us. We go into a lower time frame and then find that entry, right? If you want to, but some of us can just place our sell order, liquidity left behind. I'm not sure why it's not placing properly. Well, but anyway, liquidity left behind. What do we do from there? We are selling into the next demand zone, which is here, guys. And look at that. Price comes right near that, misses it by about pips, like 16 pips. But at the end of the day, look at the risk to reward. We managed to bag about 92 pips. So while this is happening from that sell that we just took right now, we are breaking structure again, right? Structure is breaking. Break the structure bottom, right? And now we've left liquidity here. That's definitely liquidity left behind there. Where are we looking at now, right? We need to figure out where within this area, where is price, where is the candle that caused price to go further down. So above here, we're gonna highlight microstructure, which is basically a sub-break over here. Sub-break of structure there, sub-break bottom. And we're definitely gonna highlight uh, this, these two candles, this candle here, which really got activated. You can clearly see price broke structure, came through and then expanded. So this could have been another entry for you guys, right? I'm gonna leave that there. I think I'm gonna just make it gray. I don't like the way it's looking. Right. Just make it gray. Yeah. Just make it clear. So price does come through. This would have been another entry to get that sell into this area. Obviously, we are targeting these main areas of interest. Expands. Where's the next level of structure? Within this candle here, guys, I noticed something. Within this candle, we actually strip liquidity within this candle. So liquidity strips, right? So which means now that this expansion, this order block is now valid to be used, right? This order block is valid. You can clearly see what happens here is price literally barely taps in, right? Depending on your spreads, I think you would have been activated if you got in for a manual order to sell price into this order block over here, right? That tapped in, right? It's a stop loss just above here. This order block wasn't valid at all. You could have held this all the way to here as well, right? Price breaks structure again, right? Structure, bottom. See, guys, so we're just doing the same thing, guys. Literally just doing the same thing. See, literally just doing the same thing. Then what do we do? Okay, cool. We need to now find the next order block, which is this last down candle before the major move up, right? And this candle over here, right? So you can see we've got this order block, we've got that order block. Basically, price comes through, right? Microstructure shifts here, so we could have found another entry, stacked up positions, etc. But right now, we're just focusing on swing trade, right? If you wanted to, you could obviously can see that price basically demolished this order block and then seek liquidity. There was probably liquidity resting below somewhere. Oh, okay, cool. We wanted to come to probably this order block here. I'm not mistaken. Let's see if I am right or wrong. Yeah, perfect. Price didn't fully mitigate. You can clearly see those order blocks here, price tapped in, but didn't fully mitigate it, right? So price just said, okay, cool, I'm gonna leave this order block alone, right? Leave this order block alone. And then from there, I'm going to go mitigate this order block as well. From there, that could have been a buy entry for us, right? Buy all the way into that supply zone over there. Stops just below the demand zone. That would bring 400 pips. From there, guys, you must remember we're still printing, right? Remember, structure is very important. So we've got the lower low, lower high, lower low, lower high, lower low, right? Now we come through with equal highs, which is basically liquidity. If you wanted to, you could have caught the sell, but now the fact that it left liquidity means that structure can be shifted. Liquidity is created, right? Price retraces, breaks structure. So that's confirmation that okay, cool. We can actually sell now because we broke structure, right? EOS bottom. Now we look for that institutional candle. And the only institutional candle that's very clear to me is this one over here, right? We drag that right. You can clearly see price taps into it. And then from there, what happens? We get in for a sell. Obviously, we could put our entry there. You can target this order block here because it hasn't been fully mitigated yet. You can clearly see. We can target that order block there. Stops can just be above this wick, right? For like 30 something pips, right? And then what happens? Price mounts all the way, failing to break this low. So now we're stuck in a trading range. Right? We mark up our trading range. I'm looking a bit thicker. trading range, etc. And then now we're just leaving a ton of liquidity here as well, right? So the market is basically telling us a story. So now we now need to know that this area is going to be crucial. This area is going to be very crucial, right? That area is going to be very crucial because there's liquidity there, as well as this getting big structure, this getting big structure, this liquidity here. So basically, we know that the market has to come up and basically fill liquidity there, right? So as you can see, price then travels down, right? Obviously tapping into this area, which is a demand zone, right? Pushing up, right? You're stuck in this trading range. So this is now, when you're stuck in a trading range and you're a swing trader, go down to the lower time frame and trade within these areas, guys. Look for moves. You can clearly see microstructure is shifting. We break structure here, right? Break structure, your stop. What do we then do now? We then mark up our order block, which is definitely this candle here, right? We drag it there. We wait for price to come into it. Obviously, depending on how you put your stop loss and everything, you might have well gotten kicked out or the trade might have survived, right? Might have survived. And then from there, you just target the next high, right? Right? Price break structure again. So you see microstructure being broken. Microstructure top. What happens? Price then comes back, meditates the order block, and then that's another second entry. If maybe you got kicked out, right? Let's say maybe on this trade we got kicked out on that trade. We can get in again here, right? Waiting for a long, put our stops just below, and then from there have our TP at this next supply zone for about 400 pips. What happens? We break out of the trading range, which means now we aren't bearish anymore. Price is shifting into bullish momentum, right? You can obviously see that there's little patterns like trend line, trend line liquidity that was formed here. And then price just suddenly bursts out and says, I'm gone. Pushes about 800 pips to the upside, right? 800 pips to the upside with no pullbacks at all, guys. You can just see from this last pullback, we just had straight bullish momentum. Price reaches this level, sweeps all the liquidity to the left, right? And then now we just need to know where is price going next. So we go into the daily, right? Get onto the daily, do something very, very simple. Right? Get onto the daily, clear up everything, right? Look at the daily, we know that price break structure here, right? We know that this is the new front break structure here. Top. What caused this break of structure? So we have two institutional candles, which is definitely this one here, right? This one, and this one over here. That 4-hour comes through. Let's not go on to the forward yet. So this is that major push. We leave imbalance within these candles in balance, right? The reason why I selected this candle is because within this wick, there is also a order block on a lower time frame. Let's look for it on the 4-hour so that you guys just see it properly and don't think I'm just selecting random candles. Right here, this is the last down candle before the major move up, right? So we broke microstructure with this here, broke structure, microstructure is being shifted. You understand? Just from this candle here, right? So it's still valid. And we've got a refined candle over here, right? If we can refine, we've got this refined candle that price also came into. So this area is very key, right? Very, very key. And there's imbalance, look. And there's imbalance over here. There's imbalance over there, right? So back to the daily, right? We wait for price to get into our area of interest, right? Obviously now, this is now our newfound high, right? We go on to the 4 hour, boom. We wait for price to tap in, break structure, which it does, break structure here, right? We wait for now price to come into that order block, right? So the order block that we obviously can see is definitely this one here, right? You can just mark this whole area up. And then this would have been our entry for a long at this wick, targeting this high, right? Just, move it all the way there. And then what happens, right? Break structure, once we enter, price wicks us in, comes back to fill this wick, break structure again, right? Here's another entry, right? The entry would obviously be by those order blocks here, this order blocks here, right? Comes mitigated fully, right? This is another entry, right? This is another entry. So now we've got two positions running, guys, two positions running, right? That's another entry. This candle here is the cause of this break of structure. This candle here. So what I'm gonna do, I'm gonna expand it right. I'm gonna express myself and then make it gray. Okay, and also this candle here. These are two areas of interest. Why am I saying that? Because if I take my third from this low to the high of this expansion, you can see that all these candles are below the 70%. And then when we look left, we can clearly see this is prime price. Price taps in from the shift that was made here at the high, right? You can see that price started shifting here. Right? Price started shifting there. Take the structure bottom. This. Take the structure bottom. This could have been our first entry over here. Could have been our first entry for a saw. Swing trading is nice, guys, if you understand it. It's just, I just don't like the fact that we have to wait for these moves, you know? It takes long to make these moves, but when you get them, you make big money. Price even leaves a bit of liquidity. Right, leave liquidity here. So the fact that it left liquidity now, this order block here becomes the next area of interest in the future. You take that, you expand it, right? Right. Break structure here again. What happens? Price just keeps coming into those order blocks, right? I'm gonna make that one red. Take out that expand. That's another entry, right? So we've got like so many entries that we are getting just from following our rules and seeing how structures move and waiting for the shift, waiting for the break of structure. Very simple, very easy, guys. Once that happens, we know that we're targeting that zone there. Price then, what does price then do again? Break structure. Up our order blocks. Like clockwork, guys. Like clockwork. So literally in this trade, we've had about 3 positions activated. None of the positions got stopped out, right? They all went straight to the pip, So here we caught 400, 400, 400. Imagine catching all these trades using our simple strategy. So that's basically how we swing trade, guys. And it's very quite simple, right? We just need to look at macro structure, understand the dynamics of macro structure. You know what I mean? Look, okay, cool. cool. Price is printing, this, price is printing that high, that low, right? Equal low. And now this becomes the new higher low, high, right? The price break this level here. Nope, didn't. Came through, retraced. Structure is shifting micro, so you need to understand that. Then comes through break structure to the left, which means that now we're gonna have to go back up to full either imbalance or liquidity. Grab an order block, right? Grab an order block, right? Grab an order block, boom. Get in that order block, mitigate it, shift microstructure, and then from there we sell, right? So there's a lot of us who could swing trade. I think the best thing to do with swing trading is open an account for swing trading and then have like an account where you day trade or scalp, right? This could help you a lot. The only problem is most people can't afford to swing trade because it needs bigger stop losses, right? If you're using the 4 hour and the 1 hour, it needs bigger stop losses. So you can't have a 1 pip stop loss on a 4 hour time frame. It's impossible. Unless you go down and you find your entries and you get that 1 minute entry, but besides, it's still gonna be very tricky. So yeah, guys, I think with swing trading, have a lot of capital in your account. It does work. Smart money does work any time frame. Obviously, you can see with the 4 hour, everything is very clear and simple. You just need to understand macro versus micro structure, and just understand your market cycle, guys. Your expansion, your manipulation slash consolidation, and your retracement zones. From there, guys, you're good to go. So yeah, that is the video today on swing trading with smart money. It's your boy Outhenticfx. Hope you guys had a good day. I'm out.